Success is not a miracle, nor is it a matter of luck. Everything happens for a reason, good or bad, positive or negative. And if you want to become a successful property investor, in today's show, I'm going to show you how to do that. Now, I know it's a big call, but listen in today because I've got some great information to help you be very different to the average property investor.
Are you interested in property investing, success or money? Well, you're in the right place. This is the Michael Yardney podcast, where each week you'll learn a number of new ideas regarding success, property investment and money in 20 minutes or less. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, who has once again been voted Australia's leading property investment advisor. That's the fourth time he's won a similar award in the last 6 years.
Success is not a miracle, nor is it a matter of luck. Everything happens for a reason, good or bad, positive or negative. And it's the same with success in property investment. While real estate's generally considered a sound investment, when you look at the facts, only a small number of those who get involved eventually develop financial independence. And it probably won't come as a surprise to you that when you study those who've achieved financial freedom through property investment, you're going to find they come from all varieties, all backgrounds, all walks of life, all educational standards. But there are certain traits shared by all these successful property investors. Welcome to this week's episode of the Michael Yardney podcast. Now, normally we talk a bit about how to become a good investor, how to find good investments, how to bid at auction, but today's topic is a little bit different. And I went back and looked at the successful investors I've dealt with over the years, who I've mentored through my mentorship program and who I've rubbed shoulders with. And I want to tell you how they became that way so you can as well. So welcome to this week's show, particularly to all the new listeners, and welcome back to all the regular listeners. I guess today's session is different, but please pay attention. If you want to join the ranks of the investors who already achieved financial independence, then you need to model them. You need to copy those who've achieved the success that you're looking for. In today's show, I'm going to share with you the habits of these wealthy investors, the things that they share in common. Now, how do I know this? Why would you listen to me? Well, over the years, I've worked with and rubbed shoulders with many successful property investors. And I've mentored over 2,000 investors, entrepreneurs and business people as part of my 12-month mentorship program. In fact, I've arguably educated more successful property investors than anyone else. But I'm not going to talk about theory today. No. Look, if you know me, you know that I'm already a very successful property investor. I've invested for over 40 years and I've grown a very, very substantial property portfolio in residential, commercial, industrial property, and one that's given me and my family the lifestyle I desire, financial freedom that I've wanted. So let's look at what I've found when I've looked at these successful investors. And I've found they share 18 habits or traits in common. Now, we've discussed rich habits, poor habits in my book, and we've discussed other traits before. I think these are slightly different to what I've talked about before. So let's go through these today. First of all, the first habit they all share is that they've got a strategy. They've got defined goals. They've got a wealth creation plan to help them achieve their goals. Having a plan allows these investors to visualize the big picture, and it actually helps them maintain focus on their goals rather than the inevitable minor setbacks that we always encounter. And boy, are we encountering those in the market at the moment. It also means that every property investment that they make is based on proven investment criteria rather than on their emotions. And that's why many investors fail, because they don't stick to the strategy. They get sucked in by the next shiny hotspot. By having a system, by having a strategy, it allows those successful investors to say no more often. And they bypass the mediocre investments so they can take advantage of the great investments. Look, I know I've made more by saying no to all those so-called opportunities than by saying yes to them. Now, real estate can be complicated and demanding, so it's important to have a solid plan to keep investors organised and on task. The second habit all the successful investors I've dealt with share is that they treat their investments like a business. Now you say, oh, Michael, you say that all the time. What do you mean? Well, successful investors realise it's not how much money that they make that matters. It's how hard their money works for them and how much they keep that counts. So they treat their investments like a business. Doesn't matter how many properties they own. They'd rather own a smaller number of good quality properties than lots of piddly properties in regional areas. These investors are also financially fluent and they understand the system. They know how to use finance, tax and the law correctly and to their advantage. They get the right type of finance and they set up financial buffers to buy themselves time. That allows them to go through the ups and downs, the inevitables that we get in the property cycle. They also have set up the correct ownership structures and asset protection structures. They own the properties in the right structures that allow them to legally use the tax system to their advantage. It's also important for real estate investors to approach their property investments like a business in order to establish their long and their short-term goals. They've got a business plan that allows them to identify their objectives, but also to determine a viable course and action towards getting those objectives. And as a business person, they take responsibility. They are accountable. They know what their numbers are. They know what their plans are. That's very, very different to the average investor. The third trait I found common amongst the successful investors I've dealt with is that they keep educating themselves. Most Australians want to improve, they want to grow, they want to lift their personal ceilings of achievement. However, they think they can do this through trial and error. They're prepared to learn from their mistakes. Look, sure you can learn and improve this way, but only so far and only so fast. Learning from your mistakes is a slow and it's a demoralising way of growing. In contrast, seeking out and learning from mentors who've achieved what you want to achieve can help raise your level of achievement dramatically and in a relatively short period of time. I still spend over $100,000 a year on personal development and on coaches because I know it's a huge leap of faith to assume that starting at the bottom of the investment ladder with only your own knowledge and experience, an investor could ever reach the place where a proven model starts. So get the right sort of mentors around you. That's why successful investors are prepared to invest in their own education and they never stop learning. They keep reading, they attend seminars, they have mentors, they join mastermind groups. Successful real estate investors, successful business people, successful entrepreneurs take the time and make the effort to stay educated. They adapt to the market changes that way. They know about the economic trends. They understand the regulatory changes. Keeping current does require additional work, but in my view, it's an investment in your future, the future of your property investment business. The fourth big trend many property investors share is that they think big. Look, while the average Australian is content on buying a home, slowly paying it off, living off their pension, those who want to become financially free paint a much, much bigger picture for themselves. They see themselves building a substantial property investment portfolio that one day is going to replace their personal exertion income from their day job. There's nothing new about this. Long before Donald Trump became president, and even before he became a TV star on The Apprentice and he became known for saying, "You're fired," he had another favourite saying. Do you know what that was? It was actually the name of his first book. It was called Think Big. So that other trait that I mentioned a second ago of successful investors is they all think big. I remember years ago I actually sat with some clients. This is when I was seeing clients face to face, and there was a young couple, and I said to her, "What do you want to do?" And she said, I want to buy a couple of investment properties. And I turned to him and he said, "What do you want to do?" He said, "I want to pay off my ute." The average Australian doesn't think big. Another trait shared by all the successful investors I've come across is that they know their markets. Effective real estate investors gain an unfair advantage by acquiring an in-depth knowledge of the selected markets. The more an investor understands about a particular market, the more qualified they're going to be to make sound business decisions. Successful investors like to invest in what I call an imperfect market. This means they're more likely to be able to buy an investment below its true value, and if they have to, not that I'm suggesting you do, sell it above its true value. Now, let me explain what I'm getting at. The world of shares is not a completely perfect market, but it's about as perfect as you can get. That's because it's a liquid market where investors are well informed. You can buy stocks at the same price as anybody else can, as the big institution can. In general, the overall marketplace has all got the same information because for the most part, the information's equal. And this shared knowledge makes a more perfect market. On the other hand, real estate's what I'd like to call an imperfect market. I know many people who bought properties 5, 10, and sometimes even 15% below their intrinsic value. If property was a perfect liquid market, you wouldn't be able to buy a property considerably below its intrinsic value. I can do this frequently, and so can you, because of the information you've got, because of the context you've got, because of the expertise that you develop. That gives you an insider's edge in an imperfect market, and it reduces successful investors' risks. So becoming familiar with a specific property market allows successful investors to predict when trends are going to change, creating potentially beneficial opportunities for these prepared investors. They also keep abreast of the big picture things, so they know their markets at the micro level, and they also understand them at the macro level. They know things about the economy, about consumer sentiment, about infrastructure plans, I don't know, about mortgage rates and unemployment rates. That's just a few of the things, so they keep abreast of what's going on, and this enables them to make plans for their futures. They realise that successful property investments are a bit like chess. They know that they are going to do much better if they can think 3 or 4 steps ahead of others. The 6th habit of successful investors is that they develop a focus or a niche. Because there are so many ways to invest in real estate, because there are so many markets and sub-markets, it's important for investors to develop a niche in order to gain a depth of knowledge essential to becoming more successful. This involves learning everything about the type of investment and becoming confident in this arena. Taking the time to develop that level of understanding is integral to their long-term success. Once a particular market's mastered, savvy investors keep doing the same thing over and over again. They don't look for the next hotspot. They don't go elsewhere. They find something they're good at and keep repeating it. You can't become good at something by doing 100 different things once. You can become good by doing the same thing 100 times. They know it's much better to do one thing well than 5 things poorly. That's how they become experts in their field. Now, I hope you're finding this useful. This is not the sort of information that you're going to get in other podcasts or other books. It's what I've gleaned from sitting with across the desk, from mentoring thousands of successful property investors, and also seeing what those not so successful investors haven't been doing. So I hope this is giving you some insights, because if you develop the habits of the successful investors, there's no reason in Australia why you can't also become successful. Another habit they share is that they understand the risks. Beginning real estate investors often get saturated with advertisements claiming, look, it's really easy to make money in property. You can make it overnight. You can make it with none of your own money. You can make it with lunch money. You can buy cash flow positive properties, and they'll pay for your school fees and pay for your holidays. Not true. Prudent real estate investors understand the risks associated with the business of property, including property cycles, fluctuating interest rates, and they're prepared for, they know there's going to be an inevitable X factor, something that comes out of the blue that's going to mess up their best laid plans. And if you knew what it was, it wouldn't be an X factor, and they come up every year, sometimes in the positive, sometimes for the negative. So successful investors understand risk, and they take precautions to reduce their risks. They do this by owning the right type of assets. They own them in the right ownership structures. They have cash flow buffers. They have finance strategies in place to allow them to ride at the times, to ride at the inevitable ups and downs of the property cycle. And they have the right insurances in place, not just for their properties, but for themselves, for their spouses, and for their income. The 8th habit of successful investors is they take full responsibility for their lives. Successful investors know that they've got to be the pilot of their own lives, while the average Australian feels he's just a passenger going along for the ride. Now, I don't believe in circumstances. I don't believe in luck. People create their own luck by putting themselves in the right frame of mind to accept success. Everything that happens to you is a result of your thoughts, your feelings, and your actions. You've heard me say that before. So start taking responsibility for the good and the bad things that happen to you. Become a pilot of your life. Stop being a passenger. Because by taking responsibility for both the good and the bad things that are going to happen in your life, you're going to reduce the number of bad situations that occur and increase the number of good things that happen to you. Psychologists have shown that the more you feel in control of the various aspects of your life, the more happy you're going to feel, the more satisfied you feel. I mean, that makes sense, doesn't it? And of course, the opposite's true. If you feel you're not in control of your life, it's actually very difficult to feel happy. It's very difficult to feel satisfied. I find that underachievers love taking responsibility for good results, but always seem to blame others for their bad results. They tend to blame the economy, the government, the property markets, their employee, their employer, their employees, anybody else other than themselves. They find reasons why they haven't achieved financial success. On the other hand, successful people know that both the good and the bad things that occur are there because of what they've done, what they've thought, their habits, and not because there's anybody else to blame for them. So far, I've gone through 8 habits of successful investors. By the way, you can translate this if you're in business or if you're in profession to business people and entrepreneurs as well. I've got another 8 I want to share with you, and I'm going to come back in just a moment after the break, and we're going to have a talk about another 8 habits of successful property investors. So if you know what successful investors do, you can copy them, you can be like them, you can achieve what they want to achieve. I'll see you in just a moment on the other side of the break.
If you're looking to get started in property or to grow your existing portfolio, turn to someone you can trust for independent advice. The team at Metropole Property Strategists have been involved in over $2 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy, their buyer's agents will buy your property for you, or you could use their renovations team, property development or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au.
Welcome back. We're going through the 18 habits of successful property investors. Now, before you say, hey, Michael, let's get to the real stuff, the hard stuff, I want you to understand this is the real stuff. It may not be about how to find exactly the right property. It may not be how to value a property or beat the banks, but it's the thing that differentiates those successful investors from the average investor. So please stick with me as I go through the next 8 habits of successful investors, because in my mind, this is what makes the big, big difference between that small group who are successful and the average Australian and the average Australian investor who doesn't achieve what they want to achieve. Going on to the next habit then is that successful investors are decisive. While the average person tends to be indecisive, they wait for the right time, the right opportunities, the right price. Successful investors take action. Why not learn from them and become decisive yourself? Once you've made a decision, stand by it. Look, we all make decisions in different ways. Some of us make decisions intuitively. Others are more analytical. You've got to think through all the ramifications before you make a decision. And yet others do it based on gut feel. They know what feels right. Whichever way you make a decision, once you've made it, stick to it and don't question it, even if others around you do. Obviously, you're not always going to make good decisions. That's impossible. I definitely don't. Just accept your decisions, follow through, and then deal with any problems that may arise. But don't delay, deal with them immediately. Don't let problems sit around and fester. They never disappear, they don't seem to go away, do they? So when things go wrong, don't beat yourself up over it, deal with it, and move on. The 10th habit of successful investors is they find opportunities where others see problems. See, some people see the glass half full while others see it as half empty. When confronted with opportunities, the average person finds reasons why not to do something. Yet successful people look for reasons why they should take action. Find ways to make the situation work rather than not work. Now, this is particularly true in property. If you can find a twist, a hidden opportunity other potential buyers can't see, such as adding value to a tired property through renovations or solving a vendor's problem, that's going to make you money. Another trait of successful investors is that they embrace change. It's often said that the only constant thing in life is change. So look forward to change and see it as an opportunity while others are frozen in the past. Take advantage of the opportunities that these changes present. Property markets change, interest rates change, supply and demand changes, market sentiment changes. The great thing is, whenever change occurs, It also seems to create fantastic opportunities. So if you're committed to moving forward, you're going to have to move out of your comfort zone. Now, I know this change tends to feel a bit uncomfortable initially, but you've got to become comfortable with becoming uncomfortable, because if things stay the same, you're really moving backwards, aren't you? The 12th trait of successful investors is that they invest. Now, you're probably saying that's obvious, Michael. No, it's not, because many people I see speculate. Successful investors don't speculate, because speculation is based on hope, while investment is based on facts. The average investor doesn't realise that they're speculating. They think they're investing, but they got it wrong, because they look for things like the next hotspot, the next big thing, the latest fad, and then they hope that things are going to work out. On the other hand, successful investors recognise that property investment can be boring. They know it's not very exciting buying a property and waiting for it to increase in value. But they don't look for excitement in their investments. They don't want to speculate. Rather than try and pick the next hotspot, investors ask questions like, well, what's worked well over the last 20 or 30 years? And they follow a long-standing, strong trend. While successful investors avoid risk by looking for predictable returns, I found that beginners or speculators say things like, well, look, this area hasn't performed well for a long time. It must be about time for it to turn. Now it's time for things to change. That's hope. That's speculation. Many speculators, they live in a world of fantasy, just hoping luck's going to fix their problems. On the other hand, sophisticated investors know that no matter how much they wish for something to happen, it's not luck that's going to make it happen. They look for the reality of every situation and realise they can make their own luck by working hard and focusing on facts. The 13th habit of successful investors is that they build a competent team around them. Successful investors surround themselves with people they trust who know more than they do. They don't expect to do everything themselves, and they're not afraid to pay for good advice. I've often said if you're the smartest person in your team, you're in trouble. So be honest with yourself about your abilities. You can't be good at everything, but you have the potential to be great at one thing. Choose one or two things that you can focus on, then find others that are better than you, or who have done it more often than you, or have got more knowledge, and make them part of your team. The 14th trait of successful investors is they've learned to use debt wisely. They're not scared of taking on debt. They've learned how to use other people's money to grow their own substantial property portfolio. On the other hand, beginning investors use finance to buy properties, while sophisticated investors understand that once they've got a property portfolio, they're going to be able to borrow against it and use finance to fund their lifestyle. The 15th trait of successful investors is they belong to a mastermind group. They've learned to hang out with winners, not whingers. You should similarly find a like-minded group of people and meet them regularly to help you in your investment endeavours. Learn what makes winners and then copy their habits. Successful investors act with integrity. If you commit to doing something, always make sure that you're going to do it. I've seen so many people in the investment business who are full of wind. They tell you they're going to do something and then create all sorts of excuses why it didn't happen. Some of them are acting as honestly as they can. On the other hand, I think some of them never had the intention of keeping their commitments. So stand out from the crowd. You must do what you commit yourself to doing. It'll get you a great reputation in the world of real estate. We're getting to the end of the list, but the 17th habit of highly successful investors is that they see the big picture. They think of the big picture around them, while underachievers, they get lost in the detail. For example, successful investors recognise the value of their properties, if well positioned in one of our big capital cities, is likely to double in 8 or 12 years. Yet the average investor, they get worried about the fluctuations of the interest rates or the government changes or all these minor details, rather than forgetting the big picture. If they've got a good asset, it's going to go up. They tend to get lost in all these details, and then they get paralysed when analysing the situation. Some of them never even take action. Of course, part of the reason successful investors look at the big picture is because they've got a plan, because they've got a strategy, they know where they're heading, as I explained before. Now, the last trait I want to share with you is that successful investors think very differently to the average investor. I guess that's already been coming out, hasn't it? I've already explained that you should look for a good role model and a mentor and learn what they've done to achieve their success so that you can copy them. I once read that if you want to become successful at anything and can't find a good role model, what you should just do is look at what everyone else is doing and do the opposite. Now, I know it's a bit cynical, but it's actually true, particularly for property investment. Because if you think about it, most property investors fail. The statistics show that 50% of those who get into property sell up within the first 5 years. In fact, about 15-20% sell up in the first year. Of those who stay in real estate, we know that less than 10% own 2 or more properties. We know that very few ever get to 5 or 6 properties, which you need to be able to develop a level of financial independence. That means to become successful, you've really got to do the opposite of what the vast majority of property investors are doing. Now, I've explained that clearly in my books, in my blog, and in previous podcasts, but that's why I've spent so much time today telling you what the successful people do. So if you want to become a successful investor, I suggest you consider putting these ideas and concepts into action. They've worked for others, they've worked for me, so they could work wonders for you. I guess the bottom line really is that despite all those abundant advertisements claiming that real estate's an easy way to wealth, it's in fact a challenging business. It requires expertise, planning and focus. In addition, because the business of property revolves around people, investors benefit in the long run by operating with integrity and by showing respect, as I've explained to you. Though it could be relatively easy to enjoy short-lived profits in property, developing a viable real estate business that's going to one day replace your family's personal exertion income is going to require additional effort, additional skills. So what I'm going to be suggesting is that you keep listening each week to this podcast to learn more of these. But if you want to work more closely with me, for over a decade now, I've been running a mentorship program. I've had over 2,000 people go through it, and I've had some amazing results. Some are beginners who are just starting off, wanting to shortcut and not have all the challenges, and others are very, very successful investors. And as part of it, you have access to some power chats with me, plus a 1-year program which you can see online anytime that's going to teach you the successful traits of successful business people, entrepreneurs and investors. Totally different to what I've just discussed now. Each week we get a video where you can watch at any time that suits you, where you're going to be able to learn and talk with your partner, your life partner, your spouse, your kids. Boy, is it important to have your teenage kids as part of that mentorship program as well. Why not go to michaelyardney.com.au and find out all about my mentorship program. Thank you for listening to this session. I hope you've got something out of it. Listen to it again or go to michaelyardneypodcast.com and go to the show notes so you can go through those traits of successful investors again. And I look forward to having a chat with you this time next week.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from listening to this podcast, please leave us a review and we'll read it out on a future show. Just go to michaelyardneypodcast.com/review and it will take you over to iTunes where you can enter a review and let us know what you think. We'd really appreciate it. If you don't already subscribe on iTunes or on your Android phone, you'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes or a transcript of the show, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 20 minutes.